All right, does that look okay to you, Anna, and everyone else?
Yeah, looks good.
All right, perfect. So hi, everyone, and thank you so much for joining us. Thank you also for staying at home and keeping yourselves and others safe during this strange time. My name is Laura Hesse Fisher. I'm the founder and the director of Civic Series. We are a volunteer-led nonprofit organization that helps you understand, think for yourself, and have meaningful conversations about the most important issues of our time, like this one. Our events allow you to ask questions of experts in a nonpartisan and safe space. The goal of today's event is to help us all understand the international power dynamics of oil. So who the major players are, the US's role, and what's on the horizon given what's happening with COVID-19 and with climate change. So before we begin, I just want to give a big thank you to our largest donors. And thank you also to all of those, including people on this call who have donated the Civic Series. I invite you also to send us a donation on Venmo or PayPal. Even $5 or $10 means something to us. We're a volunteer-led organization, and your donations go really far in letting us produce content like this. Okay, here's how tonight is going to go. Our guest expert, Dr. Sergey Paltsev, and I will give about a 20 or 30 minute overview of tonight's topic, and then we'll open it up for your questions. Our in-person events are pretty interactive, and we're going to replicate that here. So I'm going to turn it over to our moderator, Anna, who's going to explain how this is going to work.
Hi, everyone. All right, so we invite you to turn your video on, though we do have everyone muted. And if you have a question and you're in the Zoom, send it to me in the Zoom chat box. So I am the host. And so your question will go directly to me. And when we get to the question and answer phase, I'm going to introduce you and then unmute you so you can ask your question live. And do please have your video on if you can. And if you're watching on YouTube, or if you prefer, you can call or text your question to our mailbox at the number that is in this slide deck. And we'll be asking questions that you submitted when you register. So Laura just advanced to the slide that has our phone number, and I'm going to put that phone number into the chat as well, so you have that available to you.
Awesome. Thanks, Anna.
Sure.
I also want to emphasize that there is no such thing as a dumb question at Civic Series events. The whole point of Civic Series is to ask the questions that you fear are too dumb to ask anywhere else. We give you the option to ask your question anonymously if you'd like to exercise that option. All right, so I'm very pleased to introduce our guest expert today. Dr. Sergey Paltsev is a deputy director of the MIT Joint Program on the Science and Policy of Global Change. He's a senior research scientist at the MIT Energy Initiative and a director of the MIT Energy at Scale Center. He has a lot of other titles as well, but I think I'll stop there. If you want to see his bio, you can check out our website. Dr. Paltsev, we're so pleased to have you join us.
Well, thank you very much. Thank you for the introduction. I'm looking forward to this presentation. And as Laura mentioned, well, I'll try to explain it in the basic terms. But, well, apologies because, well, I know that some professional jargon and some things are going to slip into what I'm trying to explain. So if that's the case, Laura, please stop me right away. I would like to thank for joining us, and I hope you stay safe and your family stay safe during these very unprecedented times. And well, that is affecting all of us, and that is affecting also the topic of today's presentation, oil. And we are going to discuss a little bit about that. Obviously, we are not going to have perfect answers or perfect magic ball or crystal ball, which is going to explain us where the world is going to go, but at least we will try. So maybe I'll start.
Yeah, we'll kick it off. So Sergey's going to share his screen. He has a couple of slides he wants to share with us. We're going to start off with the real basics. So, what is oil and what is it used for and why is it such an important global resource? So Sergey, please take it away.
Okay, so let me know if you're seeing the presentation.
Looks good.
Well, so I like this picture, and hopefully you see this picture of big tanker. That's a tanker which is anchored next to Long Beach Port in California, next to Los Angeles. And why is that? Well, because they don't want to unload it. It's a lot of oil currently, which doesn't have a lot of demand. And we will see why it has happened. And we also going to explain, well, what might be the some trajectories or some scenarios, how that might evolve. And why it's important, because, well, we all paying for oil one way or another, because we all using substantial amount of oil. So it turns out that, well, if you're, well, most of the audience on this call is from the US, so it means that you're very familiar with a gallon, right? So if you go to your grocery store, you're buying gallons of milk, so you're familiar with that shape, you know how much is that. And if you are in the US, on average, each of us on this call and everybody else in the country consuming every day 2 gallons of oil. So if you divide the total amount of oil in the United States by people by the day, well, that's how much each of us are consuming every day all year long. And so it means that if the price of that gallon is, well, I don't know, like $1, or if the price of that gallon is $4, you're immediately going to have some impact on your budget. Well, the rest of the world is not as consuming in terms of the oil as us, so they're consuming about half a gallon of oil, which is still, if you're thinking about the Africa, if you think about the other parts of the world where the consumption is much lower, still that's a lot of oil which we have to produce and which is consumed in many sectors of the economy. Well, where that oil is going, most of the oil obviously goes into our cars, into our trucks, into our SUVs. So we'll love bigger and bigger cars. And if we are going to take a look at the statistics, well, that's what we are buying. We are buying even better car, more bells and whistles, and those cars are consuming more and more oil, unless you're switching to electric car, which is going to be another story in our discussion. So in the form of gasoline, it's a lot of consumption, but also that oil goes to big diesel trucks. So while we are all sitting at home, well, we still have a delivery from Amazon, well, we still have a delivery from post office, and that's what type of oil those trucks are consuming. Jet fuel is another substantial amount. Well, we are not flying that much, and it's not clear when that is going to pick up. But also, a lot of oil is used in terms of the other products. So the plastics, the chemicals, other things which, well, probably you don't even realize that it's coming out of oil. So, but it's a lot of products and a lot of value which that commodity is producing us. And we have been using that oil for many, many, many years. And the oil price has always been fluctuating up and down, and there are many events which were happening during this more than a century of our oil consumption, which were affecting price of oil. And, well, a couple of the things which probably everybody is aware, well, the oil embargo in 70s. So that's probably when, if you're going to talk about the Opec, well, that's what comes immediately into mind of most of the unprofessionals on oil, or most of the those who are not the experts, that, well, something has happened in 70s and that drove price of oil. And that's indeed the truth. So the price of oil shoot up from about $15 at that point to about $60. So quite a substantial increase in a very short period of time.
And Sergey, if you would mind, if I can interrupt you really quickly, I just wanted to, can you explain what you mean by the embargo? Like what, at a very, very high level, this thing happened in the 1970s that really changed the price of oil. What was that?
Well, let me try to put it in very simple terms. So you have your high school class, and some of the kids in the class don't like other kids in the class. And they decide, okay, well, we have something in use for the other half of the class, but we are not going to give it to them. So that means that the producers of oil, so that half of the class which has access to oil, they decided, oh, we are not going to sell that oil to the United States. And well, that's exactly what has happened. So that's embargo on the products which are coming to the United States. And that immediately drove the price of oil. So they restricted the supply. And that immediately drove the price of oil to the roof. And so that's what created long queues on the gas stations. And that is what is happened exactly at that time. But if you're going a little bit forward in the history, well, actually you will see that, well, 5-6 years later, the price of oil went up even higher. And well, some of you, well, who are still young enough like I am, maybe remember some of those dates. And you see that, well, it has happened with Iran and Iraq and the war in that region. And so at that point, the price of oil was shooting to $100. And then actually it was a period of very low prices during the 80s and 90s until in the 2000s, the price of oil start climbing back again quite substantially. Well, all these high oil prices currently seems like a long history, because if you have checked the news, well, everybody has heard that, well, in April, actually we had negative oil prices, something which we haven't had before in all history.
So that's never happened? Negative oil prices never happened?
Never, ever. So we actually need to change the software because, well, we cannot plot negative prices in many of these things because, well, if you're taking any basic economics, well, you know that, well, the economists like to draw supply and demand curves, and the price goes from zero. It never goes negative. So what was happening? And, well, we will get into that a little bit later, what was driving that price decrease. Well, another point which I want to make sure that we are on the same page is try to answer a very simple question, because I often, when I'm asking, again, uninformed friends, who is the largest oil producer? So what country is producing most of oil? Well, mostly the answer would be Saudi Arabia or Russia. So they very rarely, well, obviously they heard about the shale oil revolution and shale gas revolution. But if you're going to take a look at how much actually is currently produced and who is the largest producer, it's the United States. So we are in the unique situation where we are the largest producer in the world and we are the largest consumer in the world. So whatever is happening with oil prices is going to affect us in two different ways. Obviously, if you are that half of the class which is selling oil, well, you want oil prices as high as possible. But if you're buying oil, if you have to buy it on your gas station, well, you want negative oil prices. Yeah, pay me for filling my gas tank in the car. So that is actually shaping a lot of dynamics, how the country is responding to this change in oil prices. Also to note that if you're going to sum up what Russia, Saudi Arabia, and US are producing, you already have a big chunk of the total oil production, but that's not even half of the supply. So there are many other players who are also very important when you're trying to understand, well, ultimately what drives that price in your gas station in your neighborhood. So here, what I want to talk a little bit is the OPEC, which we already have mentioned during that embargo in 70s. And the OPEC actually was formed in 1960. So it's even before that spike in prices where they have behaved in such a way that they restricted the supply. And the OPEC countries, mostly it's the countries from the Middle East. So the biggest producer, obviously, Saudi Arabia, also Iran, Iraq, United Arab Emirates, Venezuela, and smaller producers from the region from Africa and Middle East. If you're going to take a look, well, how much power they have in the market, the OPEC actually is producing currently about 45% of total oil. So they're not really fully controlling the market, but they still produce a sizable share of that commodity. And as a result, if they are doing something with their production, and that's exactly how the price wars are starting, that they don't like the price of oil and they're trying to behave somewhat differently.
Wait, Sergey, did you say that OPEC members control 45% of the oil production?
Yes.
Okay,
Yeah.
All right.
And then on also another consideration is something which is called OPEC plus. So those are the countries which are not really part of the OPEC, but they are kind of watching, oh, well, we will see if we are with good guys who are selling or we are with those other guys who are buying. So they're kind of sitting on the fence, and depending on their agenda, they go one way or another. So formally, they're not in the OPEC, but they often behave in order to help the prices one way or another, depending on their own interests. And so that's OPEC plus. Their main party is Russia. So they are not formally a member of OPEC, but they also control a lot of production. So as a result, well, their action also very important to global oil markets. And so what originally has happened at the beginning of this year is Saudi Arabia and Russia didn't like the prices. So they didn't like that US is producing too much, and they decided, well, we are going to cut production. And so, well, you can think of, well, if there is not enough oil on the market or not enough some other product on the market, well, if you're going and trying to buy, it's not enough, well, the price is going up. So that's exactly the game which they were trying to play. But, well, there was some disagreement between Saudi Arabia and Russia. It didn't went well, and so they didn't reach the agreement. And for a while, they tried to flood the market. So they just did the opposite of what they wanted to do. They decided, okay, now we are going to put so much oil on the market that the price is going to drop. But now, all that is a history and no longer relevant whatsoever. Because now we are in a very different world. Because COVID has happened and pandemic has happened. And well, whatever the projections were at the beginning of the year, everything is just going, well, to the history as no longer being relevant. Well, before I go to what is happening currently, I also want to little bit, well, probably speculate a little bit or project a little bit about what is the future for oil. So if we are going to take at first the longer look, well, are we running out of oil or are we running out of oil use? Well, if you're going to ask that question, the answer is no. So a lot of energy companies and energy organizations like International Energy Agency or Energy Information Administration, which is a part of Department of Energy in the US, they are making projections how the world energy is going to evolve into the future. And again, nobody has a crystal ball, but they have a lot of years of experience, try to understand how the technologies are developing, where we are going. And they're trying to see, well, what is the role for oil? And it looks like for the next couple of decades, we are pretty much going to consume the same amount of oil as we are consuming now. Again, these are all before COVID projections, before the pandemic hit us. But, well, that was the view where we were going. These are the best guesses from the main projecting agencies that we are going to have much more renewables. We are going to have increase in other energy, but oil more or less is going to stay stable in terms of the global consumption.
Okay, so what the projections are saying is that even though we might have other forms of clean energy like wind and solar, hydropower, maybe even nuclear, oil consumption is slated to, people project that oil consumption will stay the same. Why is that?
Well, because we are growing. More people, economies are growing, our appetites are growing, and so that's the main reason why oil is not going away. Another reason is that oil is a very efficient fuel. So in other words, you have a lot of energy in that gallon of oil. And it's very difficult to outcompete oil economically. So, well, I've already explained at the beginning that most of the oil is used in transportation. So it means that if that is bound to go down, we would need to find some alternative ways how we are going to power those trucks, how we are going to power airplanes, how the ships are going to be powered. And if it's not oil, then what? Batteries? Well, it's not there yet, especially for big trucks and airplanes and ships. And, well, hydrogen, natural gas, biofuels, well, all of that has a lot of question marks. So it means that if we are going to get out of oil, we'd better find how we are going to replace that. And some action is happening in terms of the electric cars, but that's just one segment of where the oil is used. And even there, you can make a very simple comparison. So if you are going to think how many cars globally we have, that would be a number of around 1 billion. So 1 billion cars everywhere in the world. How many electric cars do you think we have currently in the world? Any guesses?
Maybe some people in the chat have better guesses than I do, but.
Well, so I'll help. Obviously, I know the answer, so I'm in a much better position. Well, we don't know the latest because China is growing rapidly, but let's say 10 million. So 10 million.
That's better than my guess. My guess was going to be a lot less than 10 million.
And so you can see that we have to do a lot of changes if we really want to electrify even private transportation, just the cars. And the task is much more difficult if you're talking about the heavier trucks and other forms of transportation. So that's why oil is staying with us for a long time, because we don't really have a good substitute for that. And if somebody on this call is going to invent that, great. So go for it. We'll be more than happy. And a lot of people are trying to do that, but it's very difficult to do. So now let's switch a little bit about where we are going in terms of the global oil consumption. And one thing to have in mind, if you are going to take a look at how much is consumed by the United States and China and European Union, if you add up all these numbers, you're already at about half of the oil consumption. So these three regions are consuming half of the global oil.
Okay, so that's US, China, and the EU are half of global oil consumption. Okay.
Exactly. So if I'm going to add just three more regions, Japan, South Korea, and India, well, then you're at about 2/3 of the consumption. So whatever is happening in these markets are going to have a lot of influence. And, well, you already have seen the pictures from China. Well, we already know what is happening in Europe and what is happening in the US, and I'm going to quantify that in a little bit more, but we all are driving less. So for example, I don't remember when I put the gas in my car, so probably a month ago, and usually I'm doing that once a week or something like that. So it means that we are going to contribute to how much less oil is going to be consumed globally. At this point, it's just a guess, and I'm providing you the assumption which was made by the International Energy Information Administration just a couple days ago. So they're thinking that it's going to be a reduction year to year of about 8%. Well, that 8%, if you're stretching over the year, doesn't seem that much, but we never had that reduction. So if you're taking a look at the historic reductions year to year, it never has happened. So even when we had the global financial crisis, the reduction was smaller than that.
Oh, so there was never a decrease in the use of oil. It always has gone up.
Decrease like that. So we will see how that is going to play. But even more than that, we are learning more and more, and we are getting more and more pessimistic about the recovery. So if you are going to take a look at the short-term energy outlooks from US Department of Energy, Energy Information Administration, every month they are providing their projection for the year 2020. And at the beginning of the year, they thought that, well, globally, it will be an increase of, well, about 1 million barrels per day. Over time, they are getting more and more pessimistic. And their latest projections from a couple of days ago, it's actually going to be a decrease of 8 million barrels per day. It's in the oil market, it's actually very easy to convert that into percentages. So the total global oil consumption about 100. So 8 out of 100 means, well, you're going to get 8% decrease. But again, that's not going to be even over the year, because if you're going to take a look at the current reductions are in the order of 30%. So in April, the estimate that globally we have used 30% less oil in comparison to the April of the previous year. Well, again, you remember we were starting our conversation about the Opec and the plans to reduce the supply from Saudi Arabia and Russia. And they were thinking of reducing that by about 8 to 9%. Well, if the demand went down by 30%, it means a lot of oil is there, which nobody wants right now. So that's why that picture of tanker, which is sitting in Long Beach next to Los Angeles, because nobody wants that oil, because we are not driving, we are not flying. Well, another point to make is right now, we are thinking that we are going to recover gradually. So if you're going to take a look at the projections, well, how much reduction is going to decrease over time. So, well, current thinking that, well, maybe by the end of the summer, beginning of the fall, we are going to be close to the normal. But we don't know. What if the second wave is going to hit us? What if things are not going to go as fast as we are imagining? So then the story is going to be much more dramatic, both in terms of the oil market, but also in terms of the economy. Well, one thing to take a look at is to try and see what actually has happened. And one view might be to see at the road transportation activity. In other words, well, how much we are driving, how many cars are on the streets. And well, China has started their policies earlier. So by the end of January, they have reduced their traffic by almost 75%. So only quarter of the traffic was on the road by the end of the January. And at that point, we all were kind of laughing at them or didn't take that seriously enough. And we thought, okay, well, something is happening in China. It's not going to hit us. Well, unfortunately, we've learned it hard way that it hit us very hard. And the reductions were happening in all other places in similar type of the magnitudes. In India, actually, by the April, the reduction was even bigger than in China. So the country was in a standstill. So nobody was driving, nobody was moving anything. Well, you can imagine what kind of the impact on the economy that is going to be. If you're going to take out the global numbers, so we are at about half of the activity by the end of the April, which is a very, very staggering number. Well, the airline flights and airline traffic has been hit even harder than that. And so in Europe, nobody flies, all the borders are closed. So it's only very minimal amount of the flights. well, you can make projections right away. Well, we know that the total demand from commercial airlines, it's about 5% of the total demand. So if nobody flies, well, we know how much oil demand is going to go down. Even if it's going to recover half by the end of the year, well, we're still going to be affected quite dramatically. Same story is in the United States. Again, we are sitting at homes, and as a result, motor gasoline, so that's a consumption from our cars, well, almost half in comparison to what it was before. And the Amazons and other delivery, well, they are still running on the streets, and so that didn't go as much as in comparison to the motor gasoline, but also there is a substantial reduction. And similarly for the jet fuel production and consumption. And so we are going to be impacted quite dramatically. And again, right now we are thinking that we are going to have this very quick recovery. So when you're discussing how the pandemic is going to affect the economy, usually it's letters, right? So people are thinking about the letters. So is it letter V? So we kind of went down and then back up quickly. Is it like letter U? Is it like U-shaped recovery? Or maybe it's W, so we went down, then second wave hit us. Or maybe it's a letter L. We went down and stay there. And that's going to be a nightmare if that's the story, because that is going to be very big impact on employment, on, well, everybody's life if we are not getting back to normal. But at this point, it's anybody's guess. We are hoping that it's not going to be the case, but still, well, at this point, it's not clear how that is going to evolve. Just very, very briefly, this is my last point, which I'm trying to make, is that, well, with all the focus on the current events, we still need to think about the longer term, because sooner or later we will be out of this, and sooner or later, well, we would need to make strategic decisions. And obviously, currently, COVID is an agenda and pandemic is an agenda. But, well, sooner or later, we would need to think again about the climate change, about the air pollution, about the environment, and all other things which are not going to go away. They are going to still be with us. And a lot of things which are going to be affect the oil markets and affected by the oil, because, well, oil is producing CO2 emissions. Oil is producing greenhouse gas emissions. And so that's what is driving the climate change. And so it means that, well, right now we are going to have a reduction in emissions, but I don't think that's a good strategy to reduce emissions. I don't like that strategy. I want something better, how to make sure that we are getting out of carbon and getting to the low carbon rather than killing the economy. So in terms of the medium term, what kind of the effects we might expect in the oil market? Well, when you see negative oil prices, a lot of bankers would think twice. Do I really want to give you money? Or, well, how are you going to repay me? So right now, the mood is very, very cautious. And as a result, it will be very difficult for them to finance a lot of operations. And especially if you're a small company, not the big super major, but rather the small operation, well, you're going to be hit very hard by that.
Can I ask a quick question about that? So you were talking about negative oil prices, and I really just don't understand what that means. How can something have a negative price? They're not paying people to consume oil. Like, how does that even work?
Well, that's actually very simple, and the negative oil price has very little to do with oil per se, because what is a negative oil price? What has happened? What we saw on that particular day is a particular delivery at particular date into particular location. So there is something which is called WTI, West Texas Intermediate. So that's kind of the oil marker. So that gives the indication for other oil prices, at least in the United States. Well, there is another indicator in Europe, which is called Brent, but let's focus on the US price, because the US price went negative, not the European price. So the way how it works, you are promising to deliver oil in a particular location. And it happens to be in Cushing, Oklahoma. So a lot of people are trying to make money by not delivering oil physically, but they're hoping that, well, the price are going to go up and down and they are going to make money, but they don't have to actually physically deliver that oil, but they are going to make financial gains. And so what has happened is close to that date where the future contract has to be closed, and you actually was on the hook to deliver that oil in Cushing, Oklahoma, then nobody wanted to deliver that oil, and somebody stuck with those contracts where they physically has to deliver in that particular date, in that particular location. To make matters worse, in Cushing, Oklahoma, well, there are some reservoirs where you can store oil, and those were getting close to the capacity. Well, actually not the full capacity, but a lot of them were leased and nobody wanted to give you opportunity to store that oil anywhere. So the situation was, well, it's like, well, somebody gave a very good example of the refrigerator. So you bought a new refrigerator and you still have your old refrigerator sitting in the kitchen. And well, you already have a delivery of new refrigerator, but your old is still sitting there. So you are willing to pay somebody to take that old one, just get it out. Well, that's not the price of the refrigerator. That's a price of getting something which you don't want at that particular point in that particular location.
And that's what was happening with oil, is that people were trying to get people to take something so they can make more room for...
Exactly. It's like a hot potato. Everybody was throwing to each other and kind of who was the last stuck with that one with nobody else to throw that in. So he was stuck with not being able to sell, and that what went get into the negative price.
Okay. So, thanks for that explanation.
So there is kind of a lot of subtleties because it's a lot of different prices of oil. There are spot prices, there is futures prices, so many flavors of those prices. And that particular price, which happened to be tied to that particular location. So now everybody knows about Cushing, Oklahoma, because, well, that's where you have to deliver that oil now.
If you're sitting at your computer, feel free to go ahead and Google Maps, Cushing, Oklahoma. I know that I will. So Sergey, I know that we have lots of people that have questions, and I know you have a little bit you want to get through. So let's definitely do that, and then we'll open it up to people's questions.
Yeah. So I'm about to finish my initial points. The only thing which I wanted to touch upon, because that's extremely important, is that, well, the oil is really tied to low carbon agenda, and so again, we shouldn't lose the longer side and a lot of announcement during these very difficult times from the oil majors. They are announcing something what they call net zero. So they are promising that they are going to be net zero emissions by mid-century in 2050.
So when you say oil majors, are you talking about like
oil majors? So ExxonMobil, well, they didn't make an announcement, but BP, Shell, Total, well, so the big companies who are really driving the market. So it used to be like Big Seven, then Big Five. Well, they're keep buying and selling each other. So the
major oil companies on the planet
major oil companies
are making these big climate change commitments.
Station, you will know them. So like if you're going to your Shell gas station or Mobile gas station
BP.
Or Exxon, BP. So these are the main companies which has a lot of oil production. Either they are producing themselves or they are refining somebody else's oil. So what are they announcing now is that by mid-century, they're going to be net zero, which if you think that's a very heroic assumption, because what are you saying that basically you are not going to be in business of selling oil by mid-century. And we're already in 2020. So they have 30 years to figure out how to reorient their business and make sure that they are not producing any emissions. Well, obviously, the key is the fine print in all these announcements. And so if you read carefully the fine print, well, that's not really net zero. Well, there are certain caveats, and we can go into Q&A into that. But even the fact that they're going into that direction is, well, first giving us hope that indeed we are going to move. And so hopefully that constant consumption of oil is not going to happen, is not going to materialize. And that's going to give us a hope that these companies are going to find out the ways how to find the substitute for oil. Because those are the guys who have money and who have incentives, and they can do that. They just need to make sure that the policy is there, and other things which they matter. But they feel a lot of pressure from people like you and me, from people like who are on this call, from their shareholders, from the financial community who are demanding that. And it's not a surprise that 3 major European companies made that assumption that they are going to go to net zero, made that commitment. Because in Europe, it's much, much more prominent in the agenda of the policymakers. So we haven't heard any announcement from Exxon or Conoco. Well, we'll see how that is going to play off. And we'll see if those companies who are announced are going to deliver. But I know that they're thinking about very, very seriously, and they're serious about that. And it's going to be, well, one very good news for the climate, and very good news for climate agenda. But we will see how that is going to evolve.
Thanks, Sergey. So just to summarize and say back to you what you just said, basically we have major oil companies around the world that have made climate commitments saying they're going to drastically reduce their carbon emissions. And there's this term like net zero carbon, which is a little bit, what does that even mean? And that's why you have to read the fine print. But it's going to look a lot different over the next, between now and 2050, as companies really take climate change seriously because they're feeling the pressure.
Okay, so hopefully I didn't spend the whole hour, so hopefully we have time for questions. So let's switch. So probably I'll stop sharing. And
all right, that sounds good. And so this is how it's going to go for everybody who's still on the call and watching on YouTube. I'm going to hand it over to Anna in a minute, and she's going to start in with the questions. Now, still time you can still submit them either through our voicemail, either text it, or in the chat box here on the Zoom call. I'll kind of, wrap up things a little bit at 6:30 in about 15 minutes, but Sergey said we can keep going. So we're going to go beyond 6:30. So you're welcome to stay and listen so we can make sure we answer as many questions as possible.
Well, maybe they don't want to listen to me anymore.
We'll give them that option. There's a red button for that. All right, Anna, can I hand it over to you?
Yeah, for sure. So it is it's super great to see all your questions come in. We have quite a few. And so let me just start out with some questions that people have asked from the pre-registration. So one here is, can we transition away from oil to a cleaner economy now?
Oh, well, whoever asked that question should define now, like today, tomorrow, next month, next year. Well, all of those time frames, the answer would be no. And well, the answer is very simple. We need to have an alternative. The solution, well, to crash the economy and not to go anywhere, I don't think it's a good solution because, well, we need jobs. We need to do that. And so hopefully one impact of the current events is going to be that we don't have to drive as much as before. And well, we are now currently at Zoom. And so, well, that's a good way of communication. And so probably, well, we don't need to take all those business trips which you used to be taking. And maybe, well, we are not going to go shop as much because we can shop online. All that is going to impact and move to lower carbon options. But we still have to do a lot of things which requires fossil fuels. And so we're all using electricity. Our computers are powered by electricity. We are still going to drive our cars. And so we still are going to consume the products which require energy. And unless very dramatic advances in technology in terms of the wind and solar and other things, intermittency, the batteries, and we are working very hard on that. But unfortunately, that's not an easy task.
Gotcha. All right, so we have a question from Hisham. Hisham, I'm going to unmute you right now, and you are live to ask your question.
Thank you very much. I just want to just say that I myself have worked a lot with a lot of oil and gas companies, and I'm here specifically in the Middle East, and they have a lot of those ones who say like net zero and all of these things. But we know that this is not really true, what they're talking about. And I know that we said that it's not going to be political, but you cannot disconnect it from politics. I remember when we wanted to do an event there about the climate change and the clean energy, and this big oil company ejected themselves into that one without us inviting. We don't even know how it's that happening. Injected ourselves, and they changed everything, and I have to eject myself out. We know that they are also supporting a lot of governments, and we know that there are some governments around the world with specific political spectrum who are oil friendly.
So Hisham, is your question around how politics relates to some of these major commitments from?
No, my point is we're trying to find, because the event that we were talking where there were some other people who were trying to find alternative energy, and they were ejecting themselves out into it, so that injecting ourselves. So I ejected myself, and a lot of people went out of that. The people who were talking about clean energy.
So is your question around the authenticity of their commitment?
Not just the authenticity. How can we try and find, or some businesses or people try to find alternative energy when those people are trying to stop them in their tracks?
Okay.
Well, couple thoughts around that. Thank you for your comment. I fully agree with you. And again, well, this is how the market works. Well, if there are a lot of interest and a lot of money to be made, well, it's going to be a lot of behavior like that. At the same time, I already mentioned the example of Europe. So if you want to understand how to make sure that you're changing the behavior of these big oil companies, well, that's exactly how the public is demanding from policymakers the action. And I don't think BP wants to make that announcement, or Total or Shell. Well, they care about that, but that's how they make money. So it's like they're shooting themselves into their own foot, but they're willing to do that because, again, many of them are really think that it's a problem which they need to resolve, but many of them, because they have to do that because of the pressure from a person like you, from other policymakers. Well, and again, we just need to learn how and what drove the success in Europe. Unfortunately, well, in the US, well, that's not the story. And unfortunately, in Middle East, that's not the story. And in other parts. But the only thing is just we shouldn't give up and just keep doing what we do. And that's the recipe.
So Dr. Paltsev, how do I phrase this? What would be the reason why a major company would make a climate commitment like that when what they do is sell oil? Why would they say that they're going to transition to not sell oil in several decades? I mean, wouldn't that hurt their share prices? Like, how does that benefit them as an organization from a financial perspective?
Well, there is a good saying, if you are running from a bear, you don't need to run faster than the bear. You just need to run faster than the slowest person. So I think right now it's a race between the companies. Who is going to be the greenest oil company, or who is going to be the most responsible oil company? And so there is part of that. Also, if you're in Europe, a lot of managers and a lot of those who are making decisions at these oil companies, well, they realize that it's a problem. They realize that maybe not tomorrow, maybe not in the next year, but sooner or later, well, that low carbon agenda is going to overtake, and well, they better find a way where they're going to make the money. And so as a result, that's also pushing them to think much harder. Is it going to be electricity? So if we are going to electrify everything, well, maybe BP is going to be the biggest electricity company.
So that's like moving from gas cars to electric cars and
Exactly.
furnaces, oil furnaces to
and
electric furnaces.
I'm not a naive person. I don't think it's going to be nice and smooth unless there is a pressure and continuing pressure. The progress is going to be with a lot of other things which are going to drive their behavior. And after all, this is how they're making money. You're exactly right. And so they just need to find a way. Okay, what is another way to make money?
Well, and you work with a lot of these oil companies, so I know
Yes,
you know what you're talking about.
Yeah, we know, and they are very serious about trying to find alternatives, and they are very serious about, sometimes, unfortunately, it may be some experiences where smaller thinkers feel like they're pressured by those with bigger opportunities, but it's a lot of research and development which is happening in these companies who are really thinking how to do the low carbon switch.
Thank you. Anna, I'll turn it back over to you.
Yes, so Sharon, I'm sorry, Carol, apologies. Carol, you are live to ask.
Carol, you're live to ask your question.
You're talking to me?
Yes, sorry,
Carol?
Anna was breaking up a little bit. So Carol, go ahead.
No, I don't have a question. I think he's answered the question that I had earlier. Okay, let's
great.
put it that way. Thank you.
Okay, no.
Oh, good. I'm ahead of time. Great. I like it.
All right, no problem. All right, can you all hear me okay?
Yeah, you're breaking up a little bit, but right now it's okay.
All right. All right, here's another question from our Eventbrite. It says, how long will oil be the main source of energy?
Well, that's a very easy question. We don't know. So again, as soon as somebody is going to find an alternative how to power our transportation, or when we stopped moving as much, well, then we are not going to have oil as a major source. And again, we already have seen electrification in some parts of the transportation spectrum, but we need other solutions. So we need solutions for big trucks, and hydrogen, for example, might be the solution. The good thing about the hydrogen is that hydrogen as clean as the source of the energy which you put in order to produce hydrogen. So if you're producing that from wind and solar, hydrogen is zero emissions. And so while that's a great news, again, the catch-up or the fine print is currently it's very expensive. And you need to create another infrastructure in order to provide hydrogen.
So hydrogen, just say again, so hydrogen is potential alternative to oil in these situations, but you need electricity to create hydrogen. It'd be great if you could do that with wind and solar. It's just expensive right now to do that with wind and solar.
Exactly.
Okay.
And then on top of that, you need to build the infrastructure. So if you are going to turn on almost every other corner, you will see a gas station. So, well, that's the beauty why you have your car, because, well, you can put the gas in almost everywhere and very, very quickly. Whatever the alternative is going to be, you have to recreate that infrastructure. And so that's a very difficult thing to do. So that's why electricity is good, because, well, we already have a lot of places where we can plug our cars. But again, the battery are not there yet in order to make big difference. Biofuels might be another solution. But biofuels also, well, you have to be careful because, well, a lot of things which are related, how they're competing with food, how other things, how you're reforesting or deforesting. So a lot of things needs to be resolved, but in principle, that's another zero carbon option which we can use.
And so biofuels, can you just quickly, how do you make a biofuel?
Well, you can...
I mean, what's it made out of? It's corn,
You can make it out of corn, then you're producing ethanol. You can make it out of the trees. Well, you can burn, well, we had a lot of history. Humans have been burning biomass for ages. And so we know how to convert that into the fuel as well. And so You have some process where you're liquefying that energy, and then you just put it into the tank. So if you're in Brazil, for example, well, in their gas stations, there are two pumps, one for gasoline and another is for ethanol from sugarcane. And a lot of cars in Brazil are so-called flex fuel. So it means that you can put either fuel into your car. And so what a lot of people are doing when they're driving to gas station, they're looking, oh, what is better for me today? Do I want to put gasoline? Do I want to put ethanol? And so, well, but you have to have a very good supply of ethanol like in Brazil because, well, they are very good at, well, they're blessed by nature with sugarcane and other things. And so their cost of ethanol is much cheaper than in comparison to many other parts of the world. But in principle, you can do it from any kind of the biomass, switchgrass. And so right now it's a lot of research on this type of the feedstocks, which are not really going to compete with the food, because that's a key. And that's a key even from the public perception, because if we would be thinking, oh, you're growing that to power your car and I'm having less food, well, that's a non-starter. Wow. So that needs to be overcome.
Yeah, that's I can see that being a huge issue. I want to acknowledge that it is 6:30 on the East Coast. And so I'm just gonna really quickly, I'm gonna share my screen for a second. If you do have to leave because it is 6:30, please take a second and fill out our 1-minute survey. You can go to it at civicseries.org/survey. We have other events coming up in June. We're going to be talking about healthcare and understanding the healthcare debate in the United States. In July, to celebrate Independence Day, the question of does my vote matter, and talking about representation in the US. So stay tuned for details on these events. Make sure that you're on our mailing list. And that all being said, I'm just going to turn it right over back to Anna so we can keep going with our questions.
For sure. All right, so we have a question from Daniel. Daniel, you're unmuted now, so go ahead. You're live.
Hi, Dr. Paltsev. Thank you for that talk. That was really interesting. I wanted to ask you a little bit about a little bit more from the producer's side. How are like the different producers of various sizes being impacted? So both like large companies like Exxon or Shell, but also maybe, I don't even know what a medium and a small producer might be, but if they exist, I was wondering if you could share a little bit how they're reacting specifically to the COVID pandemic. So I'm thinking kind of like how are their finances, who's shutting off their pipes and who's not, that kind of thing. Thank you.
Well, that's a very important question. And obviously, well, one thing which is going to indicate how they impacted, you saw that drop in demand. So it means that, well, right now it's plenty of oil and it's not that many companies, so not that many people which demanded that oil. So it means that, well, you have very little option. You can either try to produce and try to squeeze that at a very low price, or you stop production. And a lot of these independent producers, especially in the tight oil and shale oil production in the United States, well, as a rule of thumb, they need the oil price at about $40, $45 per barrel. So currently prices are at about 30. So they're no longer negative. They actually increased a little bit. So currently they're a little bit more than 30. So it means that if you're going to produce, you're going to lose $10 on every barrel which you are producing.
And Sergey, Dr. Paltsev, you said independent oil producers and shale oil. Who are these people? Well,
it's a lot of very small scale. Well, you can go and buy some acreage in Permian Basin in Texas, and you can go to the bank and tell, okay, give me $10 million, and well, that's about the price of drilling and kind of creating. So if you are brave enough, well, the family, and if you have access to some acreage where you think there is a resource, well, any of us can do that. And so there are a lot of small companies, and that's what actually has driven that increase in the US production, is not the big guys, it's not the Exxon, not the Shell, not the BP. They came later. So it's a lot of experimentation from these rather small scale producers who weren't afraid to lose much. And so that's what driven the oil revolution which we are experiencing currently in the US. So those are the companies which currently are experiencing the most difficulties, because obviously they don't have as deep pockets as big companies. So for them, it's much harder to withstand this current situation. And there are already some filing for bankruptcies. There are a lot of not so good news about how that is going to develop. Well, even worse than that, it's not clear, even if you're going to shut down the production, how easy is that to restart the production? Because that's also not the trivial activity. And in many cases, you're going to lose that production. In many cases, you're actually going to produce more, but it all depends on the geology. So currently, the situation is not that good for them. And I'm afraid it's not going to be good for quite a while. So we'll see how that is going to evolve. But the resource is there. It's not going away. It's still sitting there. So as soon as the situation is going to improve, we are going to see the pickup in that activity. And well, unfortunately, somebody is going to lose all of their money, but somebody is going to pick it up and the production is going to continue.
All right, thank you for that. So we have Kurt, who's going to ask us a question. Kurt, I just wanted to say, was the first person to leave us a voicemail. Thank you for that, but he's here live to ask it. So go ahead, Kurt.
Thanks. Really a great idea to have the voicemail. I like that. I was curious to know, I'm a USer and spend the vast majority of my time thinking about the United States and, our like, similar folks in Europe, where the oil industry is dominated by investor-owned utility or investor-owned companies. But my sense is that overall, globally, more oil is produced by state-owned producers. And so when we think about how we apply pressure, find leverage to change their policies, how might we, what should we know about these state-owned producers? How are they different in say, useful ways for people who are trying to push for change?
Yeah, and by state-owned, government-owned.
Yeah, that's right.
Great.
Well, so definitely they have very different organization and very different, sometimes the motives, and they have very different views. And you are exactly right. And immediately, you can name, for example, Saudi Aramco, right? So that's the biggest company from Saudi Arabia. There are two big companies out of Russia, Rosneft and Lukoil, which are actually not state-owned, but we are not going to go there. It will take me another hour and a half to explain how that situation is evolving. But you're exactly right. So more and more production and a lot of reserves in those parts of the world. Again, if the question which you're asking, how we are going to affect their action, that they also think about the long term and also think about decarbonization and how to deal with that, it's, again, the oil is interaction of supply and demand. If there is no demand, they have no place to sell it other than, to themselves. But their markets are not that large. And so if Europe is not going to use oil, if the US miraculously is not going to use oil, I'm not going to bet on that anytime soon, but then there is no oil from Saudi Arabia to ship anywhere, right? And then the question is, okay, wait a minute, but what about China? What about India? What about Africa? And so that's another story. And the story there is also very different if you're going to look at different regions one by one. So, for China, for example, they're also importing a lot of oil, so they want to also increase their energy security. They want to be a technological leader, and they do a lot in all of this electrification and hydrogen and other things, which they're trying to be technological leader and actually beat the US in that game and sell all that stuff back to us, and they're already selling a lot of stuff to us. In Africa, it's a very different story. over there, the decarbonization has to go with the help because, well, if you have 100 people, if you don't have energy access, that's a very different agenda if you are comparing that with, well, Europe or Norway or other places.
And Dr. Paltsev, can you just break that down? So you're talking about energy access and decarbonization. So what does that mean? Well,
energy access. Currently, about 1 billion people in Africa do not have access to energy. 1 billion. So if those people are going to start consuming energy, that's going to be a huge demand. And that's a key question, what kind of energy they're going to consume. And so if it's going to be low carbon energy, well, that's going to be one impact. If it's going to be coal, oil, and natural gas, then Europe can go to zero in terms of their consumption. That's not going to help to climate change. US can go to zero in their carbons and in emissions. That's not going to help the climate change because the problem is global problem. So it means that in all parts of the world, we need to reduce emissions, not just in one particular location. But we are consuming a lot of that stuff. And so that's actually our leadership role to show the world that it's possible. Because in many places, they're simply afraid. They don't believe that that is feasible. And so if Europe is going to show, well, no problem, we can be net zero by 2050, then the rest of the world is going to learn from that. But if nobody is willing to show that, then it's a problem.
So it sounds like with big oil companies that have investor shares, the pressure can come from the investors themselves, and it can come from the people who consume their product. When it's state-owned, so government-owned energy company, really you can't really pressure the investors. They're already investors, so you can't, they can't actually be provide pressure. But it's really about the market and reducing the market demand for oil, especially looking toward the future and finding alternatives. Is that how you do it?
You just passed my economics exam.
All right. Just means I'm listening.
Very cool. All right. So we have another question. It's from Mark. So Mark, I'm going to unmute you right now and you're live.
Great. So my question is about the future of the global oil supply. In the early 2010s and prior to that, there was a lot of talk about peak oil, that by a certain year in the not so distant future, the world would run out of oil that could be extracted cheaply or economically. So given technologies that have been developed and deployed since then, what do you or other organizations project that how long the world can continue to extract oil relatively cheaply?
It's a lot of oil out there, and we are finding more and more ways how to extract oil. And we are not running out of oil anytime soon. And if you are going to take a look at the history of the reserves, they are actually growing over time. And that's, again, the technology which we are unpacking how to get that oil out of the ground is getting better and better. So currently, by some estimates, we have about 40, 50 years of oil without any additional discoveries how to get even more oil in comparison to what we currently have. So in terms of the peak oil, I think it's not going to happen on the supply side or not on the production side. We will have plenty of oil for many, many years. But hopefully it's going to happen on our side, on the consumer side, on demand side, where we indeed will find the alternatives. Because, well, why oil is so good? Because, well, Mother Nature has been doing that process for millions of years. They put a lot of energy from these fossils, and we are just unpacking that energy. And it's very difficult to beat and invent some alternative way how to create that energy. But hopefully we are bright enough, and hopefully, well, at our institution like MIT, we have a lot of engineers who are working nonstop on trying to find those solutions. I don't know what that solution is going to be. Maybe fusion, maybe something else, maybe hydrogen. Hopefully one of these is going to work. but it's not going to work because we are running out of oil. Hopefully it's going to work because we care about our planet, because we care about our environment, and because we will realize that, well, we cannot continue what we have been doing for all these years. We need to take care of the planet because, well, that's the only place which we have. And hopefully this pandemic has taught us at least something, that the world is fragile and we'd better pay attention and take a good care of the world.
Cool. Thank you, Mark, for your question. So this question is from Yang. Yang is not available to ask it, but Yang asks, if oil demand stays depressed for 2020 and into 2021, how will that affect the U.S. shale and fracking industry? Also includes Canada in that category as well, Canada's fracking and oil industry.
And before you answer that question, if you could define again what the shale industry, and also really quickly what he means by fracking.
Okay, let's see if I can give an analogy. So if you're thinking about the oil, probably you're thinking about, well, those gallons, right? And some liquid which is in that gallon. And so the usual way how you are extracting oil, you're finding the reservoir, which that oil liquid is trapped underneath the surface, and while you're drilling the hole, and you're getting that oil out of the hole. Well, now think about rock. I literally mean rock, solid rock. And what you are doing, what we found out, that it's a lot of very, very tiny particles of oil which is inside that rock. If you're going to hold that rock, you are not going even to realize that there is something inside. So it's literally solid rock. So what is fracking is where we are, the shale oil industry is drilling to that rock, and then literally they're just blasting that off. So they're breaking that out. So they're just making sure that that rock is losing its solid state, but it's a lot of fracture. So that's why it's called fracking. So you're trying to break that rock as much as you can. And then from all these tiny, tiny places in that rock, suddenly oil is appearing. And so that's the process of fracking. And well, another thing which is very important for that process is you're not drilling the vertical well. You are drilling vertically, but then you are changing to the horizontal direction. And so that rock is actually a layer which you are trying to break and get that oil from that layer. So the question is how that industry, which really is the driver behind the increased oil production in the US, is going to withstand these low oil prices. I don't think it's going to be very good for that industry. So if we are going to sustain $20, $30 price range, a lot of that activity is going to go down. So we are going to produce less domestic oil. Is it good? Well, if the consumption is going to go down, well, probably it's not going to be as dramatic. But if instead we would have to import oil again back from Saudi Arabia or other places, well, then we are going to pay that money not to the domestic producers, but to some other countries. And so a lot of other implications, again, a lot of geopolitics which is in place. And I don't have much time to go into all the political context. But let's say if you're president of this country and if you are importing 5 million barrels per day and versus when you are importing 0, you're going to have a very different conversation with King of Saudi Arabia. And so that is going to impact a lot of things. So back to how it's going to impact the US production, we will see. It's going to be very difficult times for the US production.
That actually brings up a question that I had, which is to understand a little bit better what the role of the United States is globally. Like, what's our negotiating power? I understand that we're the biggest consumer of oil right now, but because we're the largest producer as well, I can imagine it's kind of an interesting situation to be in. So what is our negotiating power? What is the role of the U.S.? We're not an OPEC. We're not an OPEC plus, right?
Right. So we actually cannot join OPEC. So even if we want to. So if our beloved president would decide, okay, let's join OPEC, well, he has no power because, well, he cannot control. These are all private companies. So he cannot tell them, oh, well, reduce the production. So basically that's what OPEC is doing. They can tell Saudi Arabia can tell Saudi Aramco, well, you need to reduce production because we want to make sure that the market price is good enough for us. But US cannot do that. So yeah, there is a very different dynamics, a very different role for the US. And again, the key is we are the biggest supplier. So part of us want to have low oil prices because it's good for us. But then another part doesn't have. And so it's a very tricky situation.
I just wanted to go back to like a really, really basic question, which is, so you were clear about the different uses of oil, right? There's transportation in cars, there's diesel, there's jet fuel, and then there's plastics and other things. But this is a real basic question, but how does oil compare with coal and natural gas? These are all fossil fuels, but how are they different kinds of fossil fuels?
Well, coal is a rock, right? It's a solid thing. Oil is a liquid. Gas is a gas. So very big difference. But more seriously, well, coal is dirtier in terms of the carbon emissions. So if you have a choice which fuel to get out in order to reduce the emissions, well, coal is the fuel of the first choice where we want to move out. Natural gas actually a little bit better environmentally than oil, but not that much. So all switches from coal to gas is good for the environment, especially for air pollution. But ultimately, it also releases carbon because, well, it's a methane. And so methane is containing carbon. So the formula is CH4. So C is a carbon in methane in natural gas. So we're still emitting carbon when we are burning natural gas. The dynamics in terms of the prices and availability, well, it's plenty of coal in the world. And so it's a cheaper resource. And that's why it's hard to get rid of because it's so cheap. And it's very hard to compete with coal in terms of the power production in many places of the world. In the US, well, the gas is cheap because of the, again, shale revolution, which we just discussed. And so that's a different situation. So if you're thinking about these fuels from the point of view of the climate, well, coal is the worst, then oil and the natural gas is the cleanest, but only to a degree. So if you really want to have zero carbon, you need to get rid of all three of them. Or you need to invent something which is called carbon capture. So where you're taking the carbon which is emitted, but again, that's another story. So there are some options. In terms of the geopolitics, natural gas is much more segmented because previously most of the gas was transported with pipelines. Well, now with these liquefied natural gas ships or big tankers, you can ship that gas in many places of the world. So gas is getting closer and closer to the oil markets. Not there yet, but
in terms of availability and price as well.
And price, and so it's a lot of things which are changing quite dramatically in natural gas markets as well.
Well, great. Well, we're almost nearing upon 7 o'clock Eastern, so I think it's time for us to wrap up. But before I do, Dr. Paltsev, is there anything that any final remarks that you would like to give?
Well, my biggest remark: I hope you're all safe, and I hope you and your family are all healthy. And that's, I think, the biggest concern right now. Just make sure that, well, you keep in that way. And when we are going to be allowed to go back and enjoy a little bit more of outside, that you make sure that we are all happy and smiling because, well, I'm kind of already sick of sitting at home at the same place. So I'm ready to go out, but I want to make sure that everybody is staying safe and healthy. So my best wishes to you. And let's go back to normal as soon as we can.
Thank you. Excellently said. I couldn't have said it better. So thank you everybody for joining us for this second ever virtual Civic Series event. Again, we have a couple more. Well, we're working on having them every month. So stay tuned. Make sure you're on our mailing list so you can hear about them. We got a survey at civicseries.org/survey. I read every one, so please do send us your thoughts here. And we hope to see you at a future event. Dr. Paltsev, thank you so much for joining us tonight. We really appreciate it.
My pleasure.
All right, take care, everybody.